This is Jim Emter, Van Ahn Co, Alexandria, Minnesota, with your closing grain and livestock comments for February 19th, 2021. Corn market down 7.5, bean market up 2 1/4, and those were kind of the weaker parts. The new crop actually had very good performance, with the corn market kind of holding together and the bean market up nearly 10 cents on the day. So that's kind of the highlight. Chicago wheat down 11 3/4, Minneapolis down 3, Kansas City down 5. On the week, corn up 4, beans up 5 1/4, Chicago wheat up 14, Minneapolis up 12 3/4, Kansas City up 15. So again, it was a stronger week nonetheless. When you look to price counts, we continue to hover back towards this 541, 542 area in corn. That was a big potential breakout point, and while we try to get above it each week, it seems like we find ourselves hovering back down to that level. The next price count, if we can sustain trade and build off it, is upwards of $6 off the front month. So we're asking a much bigger move of this market if we can kind of put that together, and I think that's why you're seeing sellers show up into this environment. Beans, on the other hand, that $14 mark has been a point of resistance, but the new crop contracts for both corn and soybeans showing positive outlooks, and a lot of that coming from the Outlook Forum. 92 million acres forecasted in corn, a 179.5 yield. Export demand and demand in general very strong, and that results in a 1.552 billion bushel carryout forecasted for this coming year. So I think to some degree, you just got to be aware we've got little margin or room for error as we work ahead. Beans, 90 million acres, trend line of 50.8, resulting in a 145 million bushel carryout. So again, there too, very tight circumstances. You know, we'll still see where these old crop carryouts come in, but those are new crop focus from the USDA gurus, and we'll see what it builds in as we work ahead. But I believe that's a lot of why you saw the back months hold together and rally versus the lead months crumble a little bit as traders start to move out into that new crop type environment. Feeder cattle up 92.5, live cattle up 80, hog market down 42.5 on the week. Feeders down 172.5, lives down 127.5, and the hog market up $10.50, but truly we're actually down 70 off the April, the expiration of the lead contract, causing that weekly to show a big jump there. So when hogs, we'll kind of watch the base index 77.50, see if it can work its way up to the April price. Cutouts are firm, exports are good, market's very current to below current, and that's just bringing some optimism around hogs. $93 summer values are very attractive and something we believe should be considered being marketed here. We moved this week on some percentages, and we believe it's a good area to do so. Live cattle, 114 to 116 live based, rest trade 180. That kind of summarizes the week. And when we look to the exports and cutouts there too, good optimism around the market, but just not enough to push us above these highs. This has been Jim Emter, Van Ahn Co, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great afternoon.